Is this a break of market structure, or is this a break of market structure? In this video, I will help you identify a valid break of market structure so you won't be confused again. Okay, today's video is about how to identify and trade BOS, break of structure. Okay, and how do I mean by break of structure? We have basically two ways: a break of structure for the continuation and a break of structure for reversal. Okay, so which of these two is a valid break of structure? Okay, so we have a move upward followed by a retracement, then a break here to form a higher high. Okay, low, higher high, higher low, higher high. Then we have this. Is this considered a break with just the wick before returning back? In my rule, this is not a break of market structure. In my rule, this is not a break. Okay, so for us to consider a break of market structure, the candle must close below, okay, the last lower high. The candle must close below the last lower high. This, my friend, is a valid break of structure. This is not a break of structure. So we are going to look at the chart and then follow our rules on how to trade the break of market structure. Okay, before I go, once you identify the break, you then identify your point of what? Interest that created the imbalance. Okay, then wait for price to come into this, then you take your trade. Okay, so now that you know what constitutes a valid break of structure, all we need to do is to follow these three rules. Identify the range. Okay, the range that broke the structure, in this case, this range from here to here, that is our trading range that we're interested in. Okay, identify the range. Let's see if we can get something on the chart. So looking at this price action here, this is the origin of the move. Okay, this is the origin of the move. And what can you observe here? Do we have a break on the 4 hour? Now, before I continue, a break of market structure, wherever you see a close above or below the lower low or lower high, on any time, if it is on the 1 hour, you notice that close, that is the break of market structure on the hourly. If it is on the 4 hours, that is the break of market structure on the 4 hour chart, and you are going to trade based on that. Okay, now looking at this in this 4 hour, we notice that this is not a valid break of what? Market structure, because what price did was to come in here and grab liquidity to trade lower. So in this case, I will not be observing any trading range. Okay, so the market to me here is still very, very bearish. But however, when you move down to the 1 hour, what can you observe here? We observe that from this range to this range, we have a break. You can see a close above that. This is a valid break for us to look for. A form of what? Sell. Okay, a form of what? Selling, buying opportunity to take this price higher. Okay, now we've identified our range, which is from here to here. There was a break from this. There was a break here of this higher lower high. There was a break, so we are shifting bullish. Okay, the sentiment started from here anyway. Break of structure here, all the strength and liquidity was taken. Okay, so now we know the direction of the market. Okay, we are looking for a buy. The next rule you need to ask yourself is, what are my potential POI? What are my potential POI that sponsor the break? Okay, the entire move here started from here, so I can identify this supply zone, okay, as potential areas of point of interest. This supply zone here, okay. So what happened here? Price broke structure, and I will have to wait. Now, what makes this supply zone valid? Because of the liquidity. Because of this liquidity here. Okay, liquidity will give boost to your what? Your POI. Okay, and secondly, the POI is below the equilibrium line. Okay, is below the equilibrium line. So we are always looking for a buy at a discount price and a sell at what? Premium. When price is below this equilibrium, we have discount what? Pricing. Okay, when price is above the equilibrium, we have what? Premium. I will do another video on premium and discount pricing, but not now. So what we are looking here is what? Liquidity. We have liquidity to make this point of interest what? A high probability what? Zone. Okay, now the last one you need to look at is what? Is your confirmation entry. Okay, you have to look for a way to what? To enter the market at the touch of this. So we need to go to, let's see, and what are we doing with the confirmation entry? We want a situation whereby the lower time frame is in line with what? Our higher time frame. That is all we are doing. So moving to the 1 minute time frame, you can see that the last high that tapped into the point of interest was this high and was broken here. So what happens now? The market engineered what? Liquidity. Okay, these are all liquidity here, making this point of interest a valid one. So you can now place your limit order after taking this liquidity. Put your limit order here and watch price move high. Okay, we have a long tool. This is hand side, yeah, but this is the only way I can explain the concept. If you don't understand liquidity concept, you will struggle in this market. Okay, now if you notice, we didn't get a deeper retracement, okay, into this region here to take the trade. But once you understand liquidity, that once liquidity is taken on our point of interest from this line here down, this was the other block. Okay, this is another block, simply a sell to buy. So once price goes back there and there's liquidity here, you can take your trade, okay, and place your stop loss below this. Okay, you can place your stop loss there. Now that explains the word confirmation. Then your targets are areas of what? Your targets are simply areas of what? Liquidity. So to get better target, the first one, you can take your profit off here. Okay, The next one is go back to the 1 hour, go back to the 1 hour or the 15 minutes and look for areas of target. Okay, you know that before price came in here, they are what? It engineered this liquidity on the way down. Okay, so your first target could actually be this area. Mind you, you take profit along the way, take partials. Okay, you can take your profit all the way here to clear this liquidity. Okay, to clear that liquidity. So that is the 3 steps you need to know in order to trade break of market structure. First of all, you identify the trading range. Next is your POI. Okay, and what makes your POI valid is if you have liquidity above or below. In this case, you are going long, you want liquidity to be engineered above. Okay, something like this, okay, before taking the price up. Okay, engineer liquidity, there should be liquidity. Yeah, then your confirmation is done at the point of what? Interest. The area that sponsored the break. Okay, that's the point of interest, and confirmation is simply making sure that your lower time frame is in line with your higher time frame. So go back test using this rule and then see how you can improve your trading with this. And the next video will be very important for you. Make sure you watch that. And if you are new to this channel or you have been watching my content without subscribing, please subscribe now, like this video, and also smash that notification bell so that when I release new content, you'll be the first to be notified. Okay, and also I have a free Telegram channel, link in the description. In that Telegram channel, what I do is I show my trade setups for the week, for the day, and whatever trade I'm looking at, I share it on that Telegram so that you can also use that to learn and to improve your trading. Note, I am not a financial advisor. Do not consider everything I say as financial advice. It's for education purpose only. So on that note, share. Bye.